Good morning, traders. It's Monday, November 21st. Taking a look at the charts, we got the SP 500 futures chart. You can see here we've had a nice pop to the upside, and we continue to kind of pop and grind, pop and grind. Today we're seeing equities move a little bit higher. This kind of pop and grind price action is very similar to kind of the late stages after we have a strong run. It's starting to lose that upward momentum, very similar to over here. So that's kind of where we're at. We're waiting for this upward momentum to stall out and for the market to start to show signs of divergence, just like what we see on this chart over here. This is let me just scroll down a bit, up a bit. This is stocks trading above the 20-day moving average. And anything above the 70%, which we are now in, this is typically when the stock market is getting mature in this pop, and we usually start to see what we're looking for is divergence. And we want to see stocks, the amount of stocks trading above their 20-day start to fall in price, just like over here. Right now we're still rising, but eventually we want to see this start to fall. It could take a couple weeks while the stock market continues to kind of grind its way up, make nominal new highs and grind its way up. This goes to show that the market's moving higher with fewer stocks. And that's what happened over here, where you see the stock market move up and the stock market continue to move up in these levels here while the market kind of erodes, and then eventually you see the stock market collapse and you see a sharp drop in price, and then it works its way down until we get into an oversold territory where we start to look for more of a bottom. So the market is working its way through. It's still maturing through this topping phase, and of course you can see how long it took last time. It took more or less a month and a half to mature out before we got that big drop, before it hit some more downside. So we are flirting with some significant highs here. We've got this previous high over here. We're right back into there. The market loves to make nominal new highs and then have some type of pullback, and that's kind of what we're looking at this point. Now, if we take a look at the US dollar, let's go to the US dollar index really quick here. Here's the US dollar index. We've been watching this. Really, we've been kind of waiting for it to get to this 101 area. That's kind of our level where it breaks a previous high. It was going to pop up, get overbought, and we can see we had a little bit of a squeeze up there the other day, and now it's starting to pull back. So we might be looking to get into an inverse US dollar play where we could see this settle back down somewhere into the 99, 98, potentially further than that, but that would be the first kind of reaction back down, a quick knee-jerk reaction down into a support zone. Of course, if we do see that, we're going to see precious metals and commodities firm up a little bit more. Now we are seeing the dollar down a little bit this morning, and we're seeing gold and silver trade slightly higher. Nothing too significant at this point. They're kind of still grinding and squeezing out the longs here, trying to find a bottom. And I think we're getting very close to a knee-jerk reaction to the upside, where we had the big drop, kind of tried to find a bottom, squeeze to a new low. Today we're seeing a little bit of buying come back in. I think we're pretty close to the market having a significant rally back up somewhere into this area, the 1250, 1260 area, which eventually, if it can break there, we're going to see a much more significant climb to new highs. Now, another play that is on the radar here, we watched it a while ago. This is corn, and more or less it was forming somewhat of a basing pattern through here, more or less through here, and then we had our nice we saw it start to make a full bear market, then start to firm up, start to break out of that level, and now we've had a nice pullback here in price. You can see we've got a little bit of a potential 5-wave correction here. So we broke to the upside, and then we've got a 1, 2, 3, 4, 5-wave kind of flush down. It was a little gap here squeezing right into the midpoint of all this consolidation, starting to hook up and move higher. And this could be the start of a much more significant kind of breakout of this zone into the low 20s. So I do feel as though there's some good potential with corn. It has been forming a base, and it's had a nice 5-wave correction down into support. And it looks like the overall momentum has gone from being down to now it's starting to work its way up, and it could go higher. So that might be a play we get into, which is the CORN, the corn ETF play here today. Now, if we take a quick look, this is the chart of not bonds. This is the VIX, and of course we've seen the VIX unwind here, come right back down into low volatility, and really there's no fear in the market, and that coincides pretty well with what's been going on with bonds. and that is there's no fear in the market, so everybody's moving out of bonds. They're not afraid the market's going to crash. And bonds have had this big collapse, this big pullback down deep into a long-term support zone. It's oversold, and we're just kind of waiting for the equities market to kind of top out here and reverse, and we might see bonds chop around with some volatility here. And the question is, are we going to get a reaction high somewhere up to 58, maybe 62 area? And that's it, or are we going to see a much bigger move to the upside? And this is just a big flush out on the chart, on the long-term chart. If we take a look at the weekly chart here of bonds, you can see the big moves that it has, where we see these big rallies, and then it comes down and shakes everyone out of the play, and then it takes off again, eventually has a big shakeout, rallies up, breaks out, kind of consolidates in a big way, even though this is still considered a pretty big shakeout over here. We rallied up, and now we're coming down, and we are kind of probably going to shake everyone out of bonds, and we could easily still see this bottom out here and then take off and test those highs and continue to go to new highs. A lot of it all obviously depends on what's going to unfold with the equities market going forward. But what we're seeing here is a flush out of bonds. There's no fear in the market. We've seen a complete collapse in bond prices, and we are down into a support zone, oversold, and this could be a big buying opportunity long term. You look back in the charts, it'll be a significant low that was followed by another big rally to the upside. Anyways, that's it for this morning. I'll talk to you in a little bit.